All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Kind of a boring day, right? Market right back to where it pretty much opened at. And, just, a 40-point dip and 40-point rally to get back there. And the market's still down 40 points. So it's been quite the move. But there's some really interesting elements here to it that I think are very noteworthy. This upward move is very different than many that we have seen of late. Why? Well, take a look at the Qs outperforming. Look at where the Qs are relative to where they opened, right? They are outperforming in a big way. The other space that's outperforming are the small caps. They're back to their highs on the day, where the SPY, it's got a little bit to go, but on a percentage basis as well, we're actually seeing a little more life in small caps. And that's something we just really haven't seen on a lot of these reversals. In fact, I was talking to someone this morning, and I made the comment when the market was near its lows, I made the comment, we haven't seen just one of those absolute monster reversals during this correction that we tend to see. Since the correction started in October, we just have not seen one of these monster reversals, right? We've seen the market gap up and keep going. We've seen the market gap down and keep going, right? But we haven't seen this gap down, sell off 80 to 100 to 120 points, and then reverse and go green. Just haven't seen it. Now, we're not there yet. We're not there yet, and I'm not saying we're going to get there today. In fact, I'd be surprised if the market goes green today. But, it is something where when we look at what's moving, it tends to be a little more positive than negative overall. It's not a rebound being driven by consumer staples and utilities. One of the really interesting things this morning was to see these things get knocked down. I made the comment in my note that, there was no safety spot today. There was no safety net. It was pretty much, whatever you're in, healthcare, energy, industrials, staples, whatever it be, you were getting a hit and hit hard. We haven't seen that type of day very often. Even on Tuesday when the market down, right? Utilities held in, right? We saw staples, sell off a little bit, but utilities ultimately ended green. Healthcare on Tuesday, finally gave up near the end of the day. But, to see a mass everything taken out, we just haven't seen that. And we saw that this morning. And, that is typically something that we see, around bottoms. But again, it's, in my opinion, still a little too early to say, hey, bottom is absolutely in. But this 40-point move up, it's a little bit different than some of the other rallies that we've seen. And it's one that when you combine the selling action that we saw with the buying action that we see, it's a very bottoming type of element. It doesn't have some monster volume on the bottom to say, ooh, boom, bottom's in, something like that. But in terms of just the reversal elements, very interesting. Very interesting. And, it's one that maybe we don't see a hold. Maybe we see things close near their lows today. But I do think that even if we see that, this level, if the market breaks down below today's lows and goes a lot lower, we will come back to this level. This level will not be the last time that this market level is visited if there is some more selling to come. And so I do think it's one of the first times, the first time this week where we've seen a level where we can say, look, if we buy under this level, we're probably okay to get that rebound back to this level. Couldn't say that about Tuesday, but I do think we could say that about today and the levels that have come in. So anyway, that's that's kind of what we're seeing. The VIX went up and really kind of surged here up to 26, coming a little bit off its highs. I don't think there's a whole lot to make of that. I've priced out the VXX puts, to possibly do here for the challenge. They're sitting up here around 40 on the VXX. You take a look at the pricing here on them, and if we just go out to the December options, you can see the 40s are 270, right? So what's that mean? Well, that means to break even, I have to go to 37.30. So my break-even level on the VXX, if I buy those, is right here at 37.30. That's quite a bit of ways away. It could get there by the end of the day today. It could be there tomorrow. But regardless, it's still quite a bit of ways away for that option. So I can almost say, hey, I want to see the implied volatility on the VXX options come down. And I know how funny that sounds, but it's still one where, the market still can have another dip, and we can see this VXX up here in the mid-40s, and I will run out of time on that option before it gets back to 37.30. So I've decided to hold off on it. The only thing I have for the challenge right here is the IBM calls, which are probably around break even or something from where I got into them on Friday. In fact, we can double check here. We'll see what the implied volatility effect has been. Yeah, so we're up $12 from where we were Friday, right? Never let a trade go from green to red, so I better get out, right? No, I'm just kidding. Now we're up $6. Okay, great. Yeah, we're not going to get rich watching that. But overall, it's held up phenomenally well today, and it's not isolated, meaning it's not the only stock within the group that's holding up, right? We could take a look at Amazon. Amazon's green. Amazon is reversed and gone green. Micron, reversed and gone green. Adobe, right, almost green. It was green at one point. Microsoft, right, not quite green, but yeah, similar action. So it's not like it's doing it by itself or anything like that. It's trading with some of those others and getting bought on up here. And this is one of the first days where we can look at and say, you know what, market's selling off because of fears over the trade war, right? I mean, that's, if you look at the headlines, you look at the you look at the time period and everything, that's the thing that makes the most logical sense. Of course, we never know absolutely why, right? Unless you interview every market participant and say, why did you sell, right? So we can speculate. But I think it's a pretty good assumption to say, hey, you know what, today's drop due to trade war fears. Well, generally when we've had trade war fears, the tech sector has really lagged. That's been one of the areas that's been hit the hardest. But when you read the comments that have been made by Chinese and U.S. officials on the trade war, both sides have been very aggressive in de-escalating the situation, talking about the situation de-escalating. Then we get this arrest of, the Chinese businessman, which has sparked speculation, but we haven't seen any of the major parties with the trade war or any major comments saying, oh, this is going to affect the trade war, right? Is it going to be a dispute? Yes, absolutely. Is it going to affect the, quote unquote trade war here? I don't know. That to me is can be hotly debated and something that we could easily argue that it has no effect, right? Now, does the market see it that way? Well, if you look at the price action on the market so far today, no. I mean, it's down 40 points, after that. So the market's obviously, worried about that. But we also know that fund managers are a little more protected than they have been. And, may not need to panic to the absolute same degree. Now, as I go and look at, different entries, I have my eye on some Disney. Disney got lambasted on Tuesday with the market, and nice little drop and pop here. I pick it up around this support level. Something like an AT&T, which has kind of had this similar action. There's just a lot of charts that look almost identical, to this Disney or to this AT&T. There's not a lot of technical differentiation out there in the market. So really, most things that I'm looking to be a buyer or a seller of, it's same charts. There's same charts. BHP is very interesting here to me on the heels of, the conviction buy upgrade. Rio, okay, but don't really have anything from a technical standpoint to get too excited about. Bristol Myers bucking some of the trend of the healthcare sector here today, and on some positive comments about the drug pipeline. So do we see a little follow through on Bristol Myers to the upside? I can see that coming into play. Can we see a little snapback in an Amgen? I can see that coming into play. But one of the things to keep in mind, Bristol, no, it doesn't have crazy options. The options are decent. But with a lot of these that have sold off aggressively, the option implied volatilities have really sparked higher. And that is something that has to be taken into account, because I don't want to go out there and buy something, watch the stock go 1% my way, and the option be down 20% against me. And that risk is really high right now. We've seen it this high a few times this year. It's that high out there today. Okay, so Caterpillar, yeah, I find it to be very interesting. I mean, look, it's a stock that's gone from 142 to 125 in a matter of 3 days, right? Just this week, has done a complete about face. To see some sort of snapback back into 132, here this week would be very, kind of normal, right? It wouldn't be something where you look and go, wow, that is just absolute craziness, right? But then you look at the options and you go, well, the at the money for 2 weeks are going for $5. So basically, I need a $10 move to, double my money. Is that realistic? Well, 136, I mean, that just gets us to where it was trading on Tuesday, right? But, you can kind of see that, what's being priced in is a really hefty and a really strong move. And if we see any sort of compression, we will see those option values, contract in a very big way. But anyway, there's a major difference out there today, as we talked about at the beginning of this video, and I think that's noteworthy. I think it's something to take into account going forward, and I think it's something where, if you've been wanting to buy some dips and add some exposure, this is an interesting area to do so, as long as you're not in short-term options, which could pay off, but you have to understand the elevated risk here of those. Because of that elevated risk, I'm going to hold my IBM. Okay, I'm going to hold my IBM. I'll reassess things a little bit closer to the close here today, see where some of the option values are. But even on some of my favorite stocks, I'm not a huge fan of where the option values are. Under Armour is not too bad. It's not fantastic, but it's not too bad. This is one that's trading back at where it opened up on Tuesday, has shown some remarkable relative strength, even compared to a Nike. And so Under Armour, very interesting for me, to go and to get into. And then take a look at Starbucks. Starbucks has not really been sold, with any sort of aggression here. This is something where we could be talking about this, making the next move up to 70 to 72 on the next, kind of move higher in the market. If you look at the hourly on Starbucks, we're not quite above that 7-hour, but this is one, it didn't get quite oversold, but we see it move above the 7-hour, see the stochastics move above 20. Could be a very interesting, will be a very interesting setup if we get that. And that's something that I will be looking to be a buyer of. Okay, the last group and sector I'll mention here is the airlines. Airlines had been kind of white hot here, late October, most of November. They really got hit this week, and snapping back a little bit here. Something like a United, something like an Alaska Airlines. The option prices are pretty hefty right here, but it's an area where you look at a UAL. We're not talking about the same type of damage, and when you look at the cross currents going on in the oil market right now, path of least resistance is going to be ultimately lower. We're going to have big pops. The path of least resistance is going to be lower. And you see you see many of the major producers really scrambling in a big way, and that benefits these airlines even more. And you go look at the passenger data. They're not seeing a recession, right? I mean, you go look at airline numbers. We're not talking recession. We're not talking about global economic slowdown when you go look at airline numbers. And, so to see something like a UAL, its next move, push it up into the 110, 115 area, would not be a huge stretch. And so seeing it come down to the lower Bollinger Band, finding a little bit of strength here. If you look at the hourly chart, you can see that it's pushed above the 7-hour here in the last hour. Stochastic starting to move above 20. It's starting to get into a really interesting position there. Options values just are not overly compelling for me for the challenge here just yet. All right. So anyway, that's kind of where things are. My take on a few things that are out there. You can see IBM trying to push back above the 7-hour here, as well, which is nice to see. And whenever you buy the bottom Bollinger Band, it can always be eventful. Hopefully, with the next event is a strong surge to the upside. We get things off and rolling here with the challenge. Again, thanks for hopping on, and we'll talk to you later. Take care.